Thank you and good afternoon. Welcome. This is my first public speaking piece, so please be patient. Here today to share some of my lifelong experiences in the financial services industry, having built out a fair few number of the banks in the UK over the last 20 years and globally, as well as working with some multinational insurers and some of those challenges that they faced. So I think as we move into the AI domain, we have these various risk aspects that are being brought to the fore, which I think are traditional problems that have existed for some time in my experience. And as we go into the legal and ethical aspects of AI and generative AI, it becomes more important to be able to actually quantify that information so you can leverage it and use it in a positive way that is both structured and has a positive outcome. And obviously, you don't incur any of the regulatory fines or issues that may follow. So one of the key aspects of that, and I think the underlying pillars, will be protecting sensitive data, making sure that people's information is used properly. So there are a number of adoption patterns we're seeing out in the market. We have the general pay for use, which tends to be more out front and where you're trying to control how users sort of talk and interact with your systems. I think this is probably one of the toughest ones to really operationalize, as you have to deal with some subtle aspects around PII and how that data is stored and what your models are actually doing. We have integrating your apps, which is a bit more controlled and allows you a bit more flexibility. And I think a few organizations have played with this. We're moving now into enriching your data. I think this is one of the most powerful use cases where we see organizations taking documentation and starting to build things that customers can interact with and potentially, may provide some of that information that would put you at risk. But again, you can manage that via the use case refinement and triaging. And then lastly, but not least, is the train your data, which is a pretty broad, deep tech experience if you choose to go down that road. So, what does that mean across these four use cases? Like I was just saying, the end user AI policies are, I think, quite tricky to enforce from an organizational perspective. This requires, I guess, more user-led training, just coming from a banking background. If you are from that, users are traditionally, or employees are even traditionally just provided material that they have to comply with, and it helps them kind of avoid these things, but obviously you can't control what everyone puts into it. There are various strategies to work around that and control that risk, but a lot tougher. Again, the integration on the apps process, so that gives you a bit more, you can put a risk control framework around that where you can manage it, probably through mostly use case mitigation and maybe some data screening, and that will allow you to, I guess, put some sort of framework or control where you can regress and return to previous states and ideally, hopefully, mitigate some of those risks. And once you put that out to third-party vendors, that risk framework and that control framework becomes more important about how you actually execute and implement. Enrich with your data is my, I guess, de facto chosen approach. I think for me, working in FSI, even if you're in a fintech space, I think some of the key aspects are, you really want to make sure you get your data real estate set up and managed correctly. As you collect and curate data, it becomes more important to maintain it in a way that's structured. You can implement business silos and you can manage some of the regulatory aspects a bit more aggressively if you have a proper data architecture and you actually understand where your data is and how it's put together. On top of that, it also allows you to build discrete capabilities around collating that data, preparing it, tagging it, anonymizing it, and operationalizing it. Those are huge risk mitigation factors, and if you've worked in finance and banks, you have to have that kind of traceability and auditability. So for fintechs, I'd say you definitely want that. That's going to help you accelerate out into the market and be adopted and grow very quickly, especially if you're aiming at landing deals with big banks, etc. For banks, I think this is more of a de facto kind of process for them. The only subtle nuance on that, I'd say, is with the train on your own data, they would be definitely using internal data, which could provide financial service advice. This obviously has exponentially more risk and fine and regulatory consequences. And so some of the risk control aspects around that would need to be more real time and, I guess a bit more operationally heavy from how a bank would perceive it. So I think this is probably where most of the use cases, as the gentleman earlier was talking about, when we talk about POCs kind of get shut down, because I think this is where the business starts to understand, like, okay, this is actually a new operating model, there's a new risk sort of category that's arising here, and I don't really have that broad knowledge of, I feel comfortable putting this product out there. During a recent workshop, I think one of the panelists sort of intimated that, like, the key takeaway really is, from a technology perspective, we need to get better at, I guess, quantifying what those risks are at the business level so that they can really understand from the opportunity that they're pursuing, what's their total cost going to be, what's the exposure, and that can help them quantify both the legal and monetary risks. So clearly, cloud services are really going to be growing, as a lot of these capabilities are not really accessible to the smaller firms, etc. And there's only a few people I can think of that really have their own infrastructure where they could probably build and run these kind of large executing scalable frameworks. So for the smaller LLMs and use cases, this becomes simpler, but I think as you move to scale, you really have to probably go with a hyperscaler and tackle some of the, I guess, maybe more traditional legacy concerns banks would have about putting money in that cloud infrastructure, and leverage their capabilities in those various spaces to mitigate risk and ethical and AI, in the AI space. So this is the predicted growth. So we're seeing about $50 billion by 2028 coming in through those various aspects, and obviously SaaS will be at the top of that. So the 4 pillars. So data and security privacy is something close to my heart. I want every shred of value I can from my data, and I don't really want it shared. I think organizations now, with the advent of having to move to hyperscalers, are realizing if they put that data out there and these shared LLM models are being used, there's a little bit of that aspect. So how do we really get onto cloud infrastructure, create a sandbox where our information is effectively locked into our ecosystem so that we own that, and then how do we operationalize and execute that space? So I think that's a challenge we're seeing a lot. We have a few customers, banks, that are approaching us now with that kind of risk, with that kind of data lens, which is how do we really operationalize, and then how do we move to the cloud? So that, I think, is one of the key aspects around data security risk. It probably impacts end consumers quite significantly, and if you get it right, I think at the beginning will help mitigate a lot of the regulatory and compliance risks and fines that you might face longer term, as I think AI regulations will evolve. Once you go through an audit, that will help definitely mitigate that. So I think we briefly touched on risk management. So I think a lot of these cloud infrastructure platforms are going to bring out tools which will help you identify these sort of malfeasance or people trying to manipulate or game your AI, LLMs or your systems. So again, that's talking about, like, how do we leverage that capability? How do we bolt it in? And then based on your use case, you would probably need to plug that in at the right sort of ingress and egress of how do people use your model? What are they saying to your model? What is your internal RM or sales team saying to those models? What's the data points it's ingesting? And you constantly need to watch that. That will need to be highly automized. As you can imagine, I pretty much use AI, chat AI mostly every day. And it's just way more collaborative. So you have a way more prolific data points that you need to kind of observe to manage that risk. So from a regulatory and compliance piece, there's obviously the bias and the ethics aspects of that. Being able to understand when your LLM was deployed, what information's gone in, and then, is it being biased or has it been compromised in some fashion? That's going to have to be some of the key sort of risk mitigation frameworks that we will need to implement. And all of these, I think large financial institutions have some experience in. I think some of the C-suites and the product teams maybe don't necessarily understand that. Traditionally, in the banks I've been involved in, there's a lot of CMMI and ITIL compliance that forces you to bake in a lot of this correlation and traceability and observability. So it allows you to really then use these tools to mitigate your regulatory exposure and thereby reduce your financial risk penalties. And then last but not least is obviously scalability, and monitoring. Monitoring and observability is going to be hugely critical on these pieces of infrastructure. It's going to generate, in orders of magnitudes, the amounts of data as people become more collaborative with the products you generate and use. And then obviously you're going to need the infrastructure to scale at that. So we really are talking about this is becoming a scale problem. Maybe we'll see some evolution in the ability for compute and mobiles and how these models are deployed that might optimize that. But you will still need to capture and stream that information and then be able to be accountable for it, for what was actually generated and shown. So again, coming back to that, so effective governance, mostly in cloud, that will reduce your costs quite significantly. A lot of the work we are doing now with quite a fair few banks involves around how do we plug in and mature their data and these cloud ecosystems to give them that observability into these infrastructures. This is not a hot topic, I guess, from the business and the product team's perspective, but it's certainly a key enabler and definitely a cost driver from an operations perspective. So what we're seeing is a lot of banks going for portability. So, what's your portability time objective? Where do you execute it? As you've got these models running in different hyperscalers, there will definitely be cost benefits. Where do I keep my data? How do I host that? How do I surface it? Obviously, data is how they keep you in, and that's part of their value proposition, and I guess their stickiness that they want to sell you and get you using those tools. So, having robust governance in there allows you to really have good insight into that and drive that at an organizational perspective and be aware of, these operational and, technology and cost risk. So this is a life cycle we're developing and we use with a lot of our customers. And I think it pretty much covers what we've been talking about up to now. So you definitely want to combine this with your existing operating model. A lot of banks have most of these steps in, but probably not with an AI focus. But it's really about getting your data and your information curated, being able to source it, tagging it, binding it to a use case, and then actually assessing what that risk and indeed the value proposition. So I've worked on a number of projects where we've done AI, and it's turned out to be a spreadsheet because that was just cheaper for somebody to change some data in a spreadsheet and upload it. So, at that first phase is really where you want to get into what are my risks, what are my operational and regulatory challenges. If I need to put this out there from a governance perspective, auditability and monitoring, how do I really do that in a cheap and effective way? And can I do it? Because if you can't do it, it might just be simpler to have a person probably performing that function. I think a key to a lot of success in these areas is high degree and high scale automation, and that includes automation of policies, operations and risk functions. So integrating governance on the cloud. I think everyone's gone through a cloud journey at some level. I think mostly cloud has been perceived, in my opinion, or certainly some of the projects I've worked with some of the larger multinational banks, to be a cost optimization strategy and an opportunity maybe to modernize legacy technology. As we move into cloud, there's obviously awareness and the experimentation phase of that. And then when we move to operationalization, that's when we really start to hit the initial building blocks of how do I actually understand what's going in from a CRO perspective or from a chief data officer perspective and from a CIO perspective or CISO, what are actually the core risks that I'm now having to reassess within my organizations to land that. Time's up. Right, okay. So I think the key messages and takeaways here are really understand where your gap analysis is going to come out, implement that at the right phase. When you're doing your POCs, really try and quantify the risk and the regulatory aspects. And you need a mature and robust data framework and structure to really be able to action those use cases. And last but not least, high degree of automation through the enterprise landscape. Thank you.
Thank you, Mr. Vaughan, for your insights on AI governance on cloud.